StoneCo stock strikes me as just too cheap to ignore. STNE stock is down around 80% this past year due to a series of missteps. We'll talk about those missteps in just a second, but it's interesting to see Warren Buffett's Berkshire Hathaway continues to own their stake, around 4% of the company, a little under $100 million position, previously worth a lot more, especially given that the stock is down around 80%. So it is interesting to see that the deep value, the Oracle from Omaha's Berkshire Hathaway, continues to own their stake in StoneCo. So why is the stock down? Yeah, you look at their financials, you could see previously generating over $1 billion in profitability. Then 2021, just terrible year, generating $1 billion loss. It's a brilliant fintech business. And so it's causing investors to say, well, what happened? Well, once again, series of missteps. Partly, they had this short-term challenge with a credit portfolio, partly because the Brazilian government that had this sort of malfunctioning registry of receivables. The whole approach here is that whenever you see a company that is quickly growing their loan book, it gets people super excited. The challenge is when you move fast and break things, you always run the risk that you break yourself. You start writing a bunch of bad loans. And that's what caused investors to really start worrying last year in 2021 when they said, hey, this loan book, this credit card receivables, this wasn't supposed to be a sizable loss generator. This was supposed to be a low-risk business operation. And all of a sudden you're saying, actually, there's a problem with the infrastructure they're working with effectively the Brazilian government resulting in significantly higher defaults, bad loans than they were expecting. That caused everyone to sort of press that panic button. I personally look at the results and it looks like the delinquencies, the results from that, that portfolio is well in the rearview mirror. The challenges now are other things, such as they made this disastrous bet. This was around the same time as what you were seeing with their receivables portfolio, where they made this disastrous bet in Banco Inter, which is subsequently lost the vast majority of its value. They made around a $500 million bet, or around 2.5 billion reais. And they compounded this mistake. It's one thing to make a mistake, but when you make a mistake and then you feel like, hey, double down, baby, double down, and you're like leaning into the errors of your ways, that's a way of making a mistake and turning it into a tragedy. And that's the risk that you faced here, because they took this bet on Banco Inter, which ultimately was a bad bet, and increased it to the probability of a tragedy by borrowing in US dollars. The reason why that has tragedy risk is you otherwise have this fine business, but when you borrow in a foreign currency that you're not core operating in, you do have that sort of blow up risk where, like, hey, if there's, let's say, a problem with the Brazilian government, let's say, you have this upcoming presidential election, someone says, hey, I don't accept the presidential results in crazy outcomes, the Brazilian real crashes relative to the US dollar, who knows what. If you have a situation where the US dollar rallies significantly relative to the Brazilian real, if you've borrowed in US dollars, you now have effectively this blow up risk unless you find a way to hedge against it. And so once again, it's sort of like this doubling down on potential errors that arguably created blow up risk for the business that didn't need to be there. So that was, in my opinion, a serious misstep by management. And so you did see the CFO recently announced in the second quarter update announce his departure. Now, he was a youngster, so that gets people thinking, oh, like maybe there's, more cockroaches in the kitchen. Maybe there's a problem here. I personally like to see it, actually. And it is interesting to see, especially given that they have a new incentive plan pool, which I've talked about with my Unrivaled Investing subscribers. I'm going to talk more about StoneCo in my weekly letter for the Unrivaled Investing Nation. And so looking at the results, despite these missteps, you continue to see strong growth, active clients up, over 90%, around 2 million, the total payment volume across their platform up 50%, revenue growing significantly, profitability improving back to where, slowly heading back to where it previously was. When you think about StoneCo, you're really thinking about two different segments. You have financial services and you have software. It's interesting, financial services generates a lot more revenue, but doesn't generate that much more profitability. And that's partly because their margins are so much lower now. Now, maybe their margins get back to where they previously were, in which case there'd be significant upside. When you think about these two different businesses, financial services is around payment solutions for micro and small, medium-sized Brazilian merchants, as well as offering increasingly more advanced products, digital banking, insurance solutions. Whereas the software is about, hey, what is sort of the core operating system that a small merchant needs, whether or not it's a point of sale system or ERP software, CRM software, an online presence, helping them with advertising. So they do have two very different businesses enabling small merchants in Brazil. Looking at their financial services segment, this business grew significantly. When you exclude sort of the impacts from last year with their credit portfolio, they grew around 100% year over year and are showing increasing profitability, which is what you want to see, especially given that last year was so particularly ugly for them. And then you look at, they're growing, they're crushing it. Like when you look at effectively the total payment volume growth, around 80%, you see that they're effectively able to charge more. Their take rate for their micro and small, medium-sized businesses is up significantly, year over year. Now it's around 2%. Now that a large part of that is due to, different mix for their business. But this is what I like to see. This means they have a strong and resonating value proposition. And that's sort of the crux of this channel is let's find companies with very strong value propositions or unrivaled companies, because if you have this really strong value proposition, you might have this right to win longer term, especially if you're tackling sort of a wide open market where maybe it's you and a couple of other players, but you have such a strong value proposition that you could continue to grow at strong rates in the years ahead. So if you have that strong growth and you pay a reasonable valuation, that is the formula for very attractive potential investment returns. You see that there are additional products in their financial services segment also gaining traction, such as their banking client base up over 50%, the amount of deposits that they're seeing up up nearly 3x. You see that their number of insurance products effectively being sold up 15x. So when you see something like this means, okay, they're offering something that is resonating with the marketplace. Now, once again, if you're showing that type of growth, are you, creating the risk of further blow up like you saw with their credit portfolio last year? You look at their software business that benefited from a large acquisition, a company called Lynx. Adjusting for that acquisition, their growth is over 20%, showing increasing profitability now around 15% EBITDA margins. I think for a software business like this, you could see much higher margins in the future. And management's effectively saying, yeah, we not only think that we could have higher margins in the second half of this year, which investors want to see, I like to see it. They're also saying, yeah, there might be additional effectively acquisition opportunities in the quarters, the years ahead. And for a company that generates real free cash flow, that is intriguing. Okay, so where does StoneCo stock, STNE stock, go from here? First, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. And so, and also in full disclosure, this is not financial advice. So it's important to understand, you look at Stone's recent results and you're going to say, wow, this looks garbage, because you're partly looking at the continued weak missteps, weak results that started in 2021. In the second quarter of 2022, you can see, whoa, mark-to-market losses were effectively $500 million. Now, this is almost entirely Banco Inter, that investment that I mentioned earlier, which has been a huge, drag on their income statement. But when you back that out, you say, oh, okay, let's recognize what's done is done. They made that investment. Adjusting for that loss, which is a mark-to-market loss, not a real cash loss for them, they're actually at increasing profitability, which is what I like to see. And so then the question is, well, okay, so where does it go from here? Think about a hypothetical valuation framework. Now, keep in mind, they previously generated over R1 billion in operating profit. So I'm penciling out, yeah, maybe they get back to something like that. Maybe they get back to 15 to 20% profitability. They're not there now, but the data points suggest, could they be there in the future? I think so. I'm going to want to talk more about that in my letter to the Unrivaled Nation, the Unrivaled Investing subscribers, when I post it later this week, talking about it. I look at this setup and I gotta be, let me be super straight with you, viewer. I cover a lot of different companies here. And part of that is just because I love looking at businesses. I love thinking about them. I love thinking, okay, what's your value proposition? Are you growing? And then does this have a reasonable valuation? So I include all of those core elements in each video. And that's a lot of this is just turning over rocks, trying to find that next opportunity for the things that I find really compelling, that I'm personally making large allocations in my personal portfolio. I'm talking about that primarily with unrivaledinvesting.com. But I will turn over rocks or saying, hey, is this compelling now? Yes or no? Sometimes it's a smaller name or a name that won't be interesting to a lot of people, so I don't post it on YouTube. But occasionally there are names where a lot of folks are interested, where I go, whoa, this is actually really interesting. And relative to a lot of the names I've covered, I look at Stone and I'm thinking this does have asymmetric upside potential. All companies have dramatic downside if you have poor management decisions or what have you. Like at the end of the day, any stock can go down 100%. It's just what's the probability of that happening. And so you want to make sure you're being well compensated with huge upside potential. And so I look at what's happening with, with Stone, and I'm thinking, man, this does have much better risk reward with the average company that I'm talking about. Part of the challenge is that you're dealing with effectively a Brazilian company. So if the Brazilian real weakens significantly, that will give you heartburn. I look at the fact that they're growing significantly this year. You do need to adjust for the fact that a large part of that is their acquisition of links, but still all in, you're probably penciling around 90% plus growth this year. Long-term profit margins, maybe 15 to 20%, maybe higher. I would argue that this could be a lot higher. Once again, I'm going to talk about that with my Unrivaled Investing subscribers. This is a company trading at like 2 times sales, less than 2 times forward sales, that's growing significantly and arguably has a good growth runway ahead of it. You're effectively looking at the emerging market in Brazil, continuing to launch products that are just growing at light speed. And then I provide, I'd argue, a conservative range of valuations. So we're saying, yeah, I recognize this is a Brazilian company. I recognize that risk. So let's assume a lower multiple. Let's assume 12 to, let's say, 18 times earnings multiple in the years ahead. And that gets you to effectively like 60% upside and over 300% upside. So this is the type of thing I really, really like to see. I want to personally think more about this. I want to, dive into a little bit, some of the detailed, footnotes and things that get me interested that might not be interesting to the average YouTube viewer. So I'm going to be diving in a little bit more, in the days ahead, and I will post additional thoughts for my Unrivaled Investing subscribers, because at this point I am inclined to pull the trigger, at least buy it for myself. Once again, not a financial advice for you. And I'm trying to figure out, do I want to potentially buy the stock, or do I want to potentially buy, long dated options, something like that, deep in the money, maybe out of the money. So think about, what's appropriate for my own personal financial journey, because I look at this and I think, man, this really does have significant upside relative to a lot of other companies I cover. If you enjoyed this video talking about StoneCo, STNE, please make a point of hitting that thumbs up, hit that subscribe button, and thank you so much for watching Unrivaled Investing.